Hello. Are we able to listen?
Yeah, sir. Good afternoon. This is Ritesh Victor.
Okay. Hi.
Hi.
Good afternoon.
Good afternoon. How are you?
Sir.
Okay, great. Acha, Arvind, they are on the call, so you can join on the Zoom. They are there already. Okay. 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 Chalo. See you. Bye. Take care.
So I just need to ask you one thing. I mean, have you created any link for the speakers, or there is no link for the speakers?
What do you mean by link for the speakers?
Suppose our DG chairman and vice chairman wanted to attend the webinar, so they have to, or they directly connected to the meeting. I mean, this webinar.
You can just save the Zoom link. They can directly come in. So we will automatically admit. Whoever comes in will admit.
So there is no registration process?
Actually, there is a registration process, but we assume that this link is only going to the concerned companies. So it is like not going to the general public, to everyone.
Okay.
Okay,
Now,
so only the concerned people will get it. So they will join.
It's 240 already. I mean 240 already. So now you may disable the registration process and then ask members to participants to directly join the webinar.
See, what I'll tell you, usually what it happens is till the time it starts. Let's take the webinar is from 3 o'clock. So till the time it starts, the registration is on. So as soon as the webinar starts, the registration switches off.
Okay. Fair enough, sir. But I suggest before 10 minutes would be better for registering the people, because what happens many of the time we have seen that people are not registering themselves, and they just left the situation on that situation and they don't participate.
Okay, so you want me to disable the registration 10 minutes before 3, right?
Right, sir.
Okay,
And our speakers, no, the Director General and the Chairman. So as per this link, they have to register. Otherwise, or he's saying that. No.
Directly हो जाएगा उनका, right, sir?
उनके पास सिर्फ वो link होना चाहिए, and as soon as you click on the link, I can admit it and they can join.
Bhubaneswar has connected.
Yes, sir.
Okay.
Our chairman have joined, sir.
Okay. Bhubaneswar, good afternoon. I think he's on mute.
Yes, sir. He's trying to connect.
Arvind Raj Chairman is also correct.
Yeah, hi Arvind. You are mute, Arvind, you are mute.
Hi, good afternoon to you, Ritesh.
Yeah, hi.
Hi.
The gentleman from EPCES, they had an observation that by 10 minutes before the start of the webinar,
Okay.
we should disable the registration.
So
Okay.
if we disable the registration, it will take time because I spoke.
I totally understand.
Because that would basically take nearly about half an hour to 40 minutes for us to disable the link from the registration page from the link.
Okay.
Very good afternoon to you, Mr. Noriel.
Good afternoon. How are you?
I am fine, sir. You tell me, how are you doing?
Good.
I'd like to thank you, in fact, for giving us the opportunity and for giving us the time and the space for conducting this webinar.
Same to you, sir. I know that I've done a great job. Yeah, Mr. Sunil Puri has joined.
Okay.
Mr. Sunil Puri, Vice Chairman.
Hi,
Mr.
sir.
Puri, good afternoon.
Very good afternoon to you, Mr. Puri.
Good afternoon, everyone.
Good afternoon, sir.
Good afternoon, sir. How are you?
Great.
Fine, sir.
Thank you.
So, are you able to hear our voice very clearly? Is the audio clear to you?
Yes, very much clear.
Okay.
Okay,
Mr.
great.
Puri, I like to just introduce you to my, in fact, co-founder and the head of the advisory team, Mr. Ritesh Victor, who is going to, in fact, take this session today and going to
Great.
address the members on the matters of Forex and how Forex
Okay.
transactions can really basically, in fact, where all, in fact, the members can, in fact, save money and, make vital savings in the Forex transactions that they're doing or trade financing that they're doing. Mr. Puri, are you able to hear me out?
I think there is a bandwidth issue with the sir.
Okay.
His image is like stable now.
No, I think his video has gone out.
Right.
I think there's a signal issue.
Some issue.
Are you able to hear us out, Mr. Puri? Hello?
Hi. Yes. Now it's. Sir, you are mute. You are on mute, sir.
I had some internet issue for a few minutes. Now it's okay.
Okay.
Great, great.
So,
चलो done.
ठीक है ना अभी सर नहीं होंगे तो मिलते रहना
हाँ हाँ पक्का चिंता ना करो
मैं टांग नहीं खींचूंगा खुद से बैठ जाऊंगा हाँ पता बैठो सर प्लीज आप बैठो ना प्लीज नहीं
सर बाहर जा रहे हो नहीं उसको उमेश को कहना मेरे को वो दे देगा मेरा दूसरा वाला फोन
okay. So, Mr. Puri, actually, we had called for this particular trial session just to, in fact, check on the audio video and also to formally introduce my, the co-founder and the head of the advisory team, Mr. Ritesh Victor, who is going to conduct the session today in the Forex domain. And he has more than about 20 years of experience in the Forex domain. He was, in fact, the treasury head of the Trident Group, where he was taking care of the entire treasury affairs. And he would be basically addressing all the concerns of the members in the Forex area.
Fine.
So that was another reason, in fact, of calling for this trial session, so that there is a formal introduction with you, and you also have a face-to-face meeting with the session speaker. And,
okay.
Okay, one small query, Mr. Puri. Usually for these kind of webinars, there are two structures. One structure is we conduct the webinar and keep all the question and answer towards the end.
Correct.
Okay? So that is one structure. There is another structure where I go, step by step, and people ask queries if they have anything in between itself. So they clarify the queries and then proceed to the next concept. So, so which way do you want it to work? Do we want to put the question answers at the end, or should we have questions in between as well?
I suggest the questions should come at the end only, because once you start asking the questions in between, then it takes too much time for so many things. Because I suggest let you request the members to post their questions in the chat box, and then one by one you keep on answering them.
Okay, great. So what we'll do is either we'll tell them to put it on the chat box, or we can ask them that we'll have a dedicated time for the question answer session towards the end.
Correct.
So when the when the presentation is on and they have questions, they can just simply note it down somewhere or put it on the chat box, and we can raise it up verbally as well as on the chat box towards the end.
You see, asking the questions, somebody speaking of the questions, then it goes very long. If you ask them to put the question in the chat box, then you also know you can answer one by one. Secondly, if there is any repeat questions, then you can say this has been already been answered. But when you ask, sometimes you tell people to speak, what they happen is, even though the question has been asked, they again come back and then again they ask the questions. So to avoid that, I personally feel that let everybody post their question in the chat box and you answer the question at the end.
Sure.
Or if you feel that you have completed the one part of the your
I think there's a video break. Video
I
link
think
break.
Mr. Puri got cut again.
Yeah. I think there's a video link break, so I think he should be joining us again.
yeah, is it clear?
Yeah, now we can hear you, sir.
Now we can hear you, sir.
So I personally feel that at the beginning also you say you keep on posting your questions and you will be answering time to time.
Sure.
So you have the opportunity to decide whether you want the answer the question right now or you want to answer the question at the end.
Okay. So, see, sir, personally, what I have felt is if you allow people to ask questions in between, then a lot
Okay.
of people keep asking and the things get delayed.
Yes.
So, it's better that they can put it up on the chat box.
Yeah.
Dedicated 20-25 minutes towards the end, we will have a time to interact and discuss those.
Correct.
Okay, we'll do
That
that.
will be
We'll do
done.
that. Yeah.
Thanks a lot. Give me 1 or 2 minutes because I just want to get connected with another internet.
Yeah,
So I'm
sure.
just looking for another phone. Please.
No problem, sir. We will in fact reconnect with you around 3 o'clock. Sir, your audio is on mute.
I'm already connected. I will change the internet connection in between.
Okay,
worries,
fine.
no worries.
No problem.
Thank you.
Okay, yeah, thank you.
गाड़ी में नहीं है शुरू करें खादा गाड़ी में था
नहीं वहाँ टेबल पर रखा आपके वो तार कहाँ है
खड़ी तार
Hari, good afternoon, everybody. Hello.
Good afternoon, sir. We can hear you.
Good
Yeah, very
afternoon.
good afternoon, sir.
Good afternoon. Hari,
Eji sir, Puri sir.
Hari, Shrikant ji.
Good afternoon, everyone. I have
Good afternoon.
also.
Good
Vilas ji,
afternoon.
Namaskar, sir.
कैसे बढ़ेगा सर?
All well, sir. Sorry for delay in joining. कुछ
कैसे
अर्जेंट
हैं सर?
विलास जी, आपकी तबीयत कैसी है? आज
तबीयत
तो
बेटर
delay-
है आज ठीक है बेटर है काफी सर।
आज ठीक है.
हाँ आज बेटर है कल से।
That's good.
बस ये सब करो।
डीजी आज आया तो रात ही हो रहा है क्या?
घर से अटेंड कर रहा हूँ।
नहीं, ऑफिस में 9 बजे और तो मैं बैठा हूँ।
Well, Ms. Puri, sir, we have about 10 attendees as of now. Should we wait for a few more minutes?
Let's wait for 5-10 minutes.
Sure. Before we start the session.
Now we have the chairman, vice chairman, and DG all online. So the flag of leading the show is with them. I am here to now assist them.
No, sir, we
अब आप मुझे बनाते ही रहेंगे जिंदगी भर.
कोई नहीं. कौन सा? उसको लगेगा क्या बोल रही है?
नौरियाल साहब एक बार दोबारा जरा ग्रुप में सबको डाल देंगे।
हाँ, इंट्रोडक्शन करवा दो यार।
नहीं नहीं, एक मिनट ग्रुप में सबको दोबारा डाल दीजिए, रिक्वेस्टिंग देम टू ज्वाइन, द मीटिंग इज ऑन।
ऑलरेडी डाल दिया।
हाँ, ये विद द लिंक सेपरेटली, लिंक सेपरेटली डाल के जरा सबको रिक्वेस्ट कर दीजिए टू ज्वाइन द मीटिंग।
ऑलरेडी डाल।
ठीक है सर।
अभी करना है।
Well, very good afternoon to you, sir. This is Arvind Rajamani. I'm from Myforexeye. Mr. Zed, are you able to hear me out?
Yeah, I am hearing you. Yeah, welcome.
So let me introduce myself. I am Arvind Rajamani. I'm from Myforexeye, and I'd like to, in fact, thank you for giving us the opportunity. I also would like to introduce you to the session speaker, the co-founder and the country head of Myforexeye, Mr. Ritesh Victor, who is going to conduct today's session for your members.
That's good.
So we hope that this session goes off smoothly and we are able to, in fact, address all the concerns of the members for which this webinar has been, organized, and we are able to meet all the queries of those members.
That's good.
The Forex domain.
Yeah.
Okay, hi, good afternoon. I am Ritesh Victor. So let me know when to start. I think you might have to give a small introduction and brief, and once that is done, I'll take over for the presentation. So
Yeah,
I'll wait
definitely.
for your green signal to start.
Yeah, definitely. We are just, in fact, waiting for a few more minutes for the other members to join in. Once we have the required number, then we will start the session, and we'll call up the keynote speaker one after the other. Yeah.
Okay, sure.
Mukherjee sir, good afternoon.
Good afternoon.
Thank you, sir. Good to see you, sir.
Yes, good to see. See, we are so many people on this call, but nobody is talking. Man, there's no sound. How come the EPCS is so quiet? That too, Srikanth is there, but still the EPCS is so quiet.
No, sir, because before the main speaker starts his version, they all want to listen you.
That is true. That is true. Absolutely. In among us, only the Srikanth has a right to speak maximum. We are there to clap. So we will do our job of clapping. But Shrikantji, I heard that you are in Delhi. You are in Delhi, or you are back to your place?
No, I was supposed to come to Delhi, sir. Yesterday I was supposed to come. Somehow I was unable to make it, sir.
Okay.
So
okay.
I'm in my office in Hyderabad.
Oh, so you changed the program last.
Yeah, it's the last hour I had to change.
Okay. I have to come to Hyderabad maybe in the first week of December or maybe the end of November. So I'll let you know.
So please be our guest, sir. Please let me know, sir.
Oh, yes.
I'll receive you.
Our Chief Justice of the Telangana is my friend. So he used to be our lawyer. So
very nice.
Taken over. He has invited it. There is a small function at his house.
Okay.
Yes,
Very nice.
That's how. So what time we are starting? We have.
So just waiting for a few more people to join.
Okay.
Mr. Puri, should we wait for another 2 minutes and then start with the session?
Yes, I think that will be better.
So, Mr. Ravi, you are where based? You are based at Delhi or you are based at where?
Sir, I am based out of Delhi.
Oh, you are
We
based
have a
out
main,
of Delhi.
yeah, we have a main office in Noida from where we are operating.
Oh, I see. Which sector you have it in Noida?
Sector 63.
Oh, so you are our neighbor almost, eh?
Yeah.
We are in sector D49.
Okay.
In sector 63. And sector 73 also we have a large office.
Okay. So you're next door neighbor that way.
That's what I'm saying.
Yeah. So you are based out of which city, sir?
I'm based in the Noida only.
Acha, you're out of Noida. Okay.
We have a plant in EPCES and we have an office at sector 63 and 73.
Okay.
So I sit into these offices, not the plant.
Okay. That's good
Mr.
to hear,
Mukherjee,
sir.
most probably sometime I'll come and meet you.
Sure. So you mainly deal in the Forex matter.
Yes,
That's
sir.
right.
21 years we have worked in Forex markets only. So probably we eat, breathe, live Forex. So on research, on markets, on how to manage risk, on how to help exporters and importers. That is what we have been doing all our lives.
So you are mainly of the Forex trade side, not the ED and the compliances side.
Actually, yes, what you said is right. We are mostly on the trade side because compliances and everything comes on under the legal ambit. So more on the funding, on risk management, on transaction, on international trade, that part of it.
Mr. Puri, shall we start with the session?
Yeah, I think we can start now.
Please.
Well, I would like to, in fact, my name is Arvind Rajamani. I'm from Myforexeye. I'd like to first of all thank I'd like to give my special vote of thanks to the keynote speakers who have given this opportunity for us to conduct this webinar for the members of EPCES, in which I would like to extend my vote of thanks to the chairman, Mr. Bhuvnesh Seth, the vice chairman, Mr. Shrikant Badiga, the director general, Mr. Alok Chaturvedi, the regional chairman of North India, Mr. Sunil Puri, and the Regional Director, Mr. Anil Noriyal. I'll also like to, in fact, give my special vote of thanks to the speaker of today's session, Mr. Ritesh Victor, who is the co-founder and the country head of Myforexeye. And the members of EPCES who have taken out their time to participate and attend this particular webinar. The purpose of this webinar is basically to, in fact, bring about an awareness about how the Forex transaction market is operating at this point of time. Since most of the corporate Forex is being done through the OTC platform, which is mainly controlled by the banks. But but the banks basically, in fact, keep a very opaque kind of system where most of the members are not aware about certain, in fact, tools by which the banks, charge those money from the member side without the knowledge of the member, and where they make, money at the expense of the members. What we are going to do is we are going to talk about those very tools and where they can basically, in fact, create saving opportunity for themselves, which they can use for expanding their future business operation. So in this regard, I would like to first invite the first keynote speaker, the chairman of EPCES, Mr. Bhuvnesh Seth, to speak, to say a few words to the members about this webinar and how this webinar is going to help the members in achieving their business objectives. Sir, over to you, if you can say a few words.
Thank you. Good afternoon, everybody. Dear Shri Ritesh Victor, co-founder and country head of Myforex Fintech Private Limited, Shri Arvind Rajamani, Vice Chairman Badiga ji, Alok Chaturvedi ji, my fellow colleagues from EPCES and industry. Welcome to all of you, Shri Ritesh Victor, Shri Arvind Rajamani, for organizing today's webinar for most important areas to focus on Forex management, to facilitate our members in EOUs and SEZs. Our council has 5,400 members representing SEZ developers, exporters from SEZs and EOUs. There are our contribution to countries' export is 24%, which is quite significant. 5,500 units operating in 267 operational SEZs with an investment of 6.24 lakh crore and employment of 7.6 lakh crore employees. The objective of organizing this webinar is to help in growth of members, companies by making them to understand the areas where they are losing money and how simple strategies can help them to minimize, eliminate their losses in course of their Forex transaction. In most cases, companies are not even aware of charges levied by bank and hence end up by paying anywhere between 1.2% of overall transaction. Ideally, this should be not more than 0.5 to 0.2% in transaction amount. Similarly, it is a matter of wisdom only to have correction estimation of day-to-day fluctuations of foreign currencies which are connected with developments of global activities and events. Our members may gain on the front by updating their knowledge of techniques of hedging, etc. One more tool for cost reduction is the appropriate product mix for funding, the one-time and the routine need of funds. I am sure that webinar will be on a long way to help the members in their way of maximization of wealth. This is, at present, this seminar is very much required when everyone is fighting with the increase of overall, you can say raw material, shipping costs, everything. This webinar is very important at this stage. And without taking you much time, I welcome you to start the webinar. Thank you. Thank you, Victor. Thank you.
Thank you, sir, for sharing your enlightening thoughts about how the EPCS is making a major contribution in terms of building up the export and also creating job opportunities for people in India, and also how this webinar is going to help the members in expanding their export business by, in fact, saving vital for savings on the vital foreign exchange that they're doing, transaction that they're doing at their end. Now, without wasting much of a time, I would now like to invite the next keynote speaker, the Vice Chairman of EPCES, Mr. Shrikant Badiga, if we could share a few thoughts about this particular webinar and how this webinar is going to help the members in achieving their business objective. Over to you, sir.
Thank you so much, Arvindji. I would prefer to speak after DG sir speaks. DG sir, I would request you to speak first. I'll speak after you, sir.
So, may I request the Director General of EPCES, Mr. Alok Chaturvedi, if he could say a few words about this particular webinar and just give a model word of encouragement to the members and how this webinar is going to help them out in achieving their business objective. Over to you, sir.
Thank you, Rajamani. Thank you, Chairman Saab and Vice Chairman Mr. Badiga. I thought that I would pick up from what you speak because you are the persons who deals in the foreign exchange. I thought that your words, I will just pick up some few things and then I can speak. But you have given the opportunity to me. I'm a bureaucrat, so I have not much idea about the Forex management. But as rightly pointed out in the brief, that most of all, I don't know what about the members, what about the CGC members and other our EPCS members. You have already mentioned that there is always a misconception that that if you manage exports through the forward market kind of thing or using the derivatives or these kind of advanced tools, sometimes I also believe, or sometimes most of the people normally say, either you have to give so much of time and you need to engage professionals for management, or if you are doing it unprofessionally, if you are doing on your own, and you don't spend so much of time in foreign exchange management tools, then you might lose as well in using this Forex management, and that's why sometimes people incur additional charges, higher charges, but they do it for the purpose that they may not lose it also. It might be true, as Mr. Rajamani or Ritesh is mentioning, that through a professional management, foreign exchange management, you will be able to incur lower costs, as a percentage of the transaction cost. But you have to convince the exporters either whether they would have to engage professionals or whether they have to spend so much of time. It's just like the stock market also. Sometimes you feel that the stock market is going very good and you try to do it, but most of the time, unprofessional people will mistime it and then we may lose the, so that's why people say that the safe harbors are there. And most of the people who are not really into this, they feel it to be on the safer side. They incur higher charges and they are not able to minimize those charges. Subject is very important, and especially for the export promotion councils, the members who are exporting, and for them, foreign exchange management should be a very important thing. And our esteemed members, they would like also to say how do they manage their foreign exchange, whether how much in transaction cost as a percentage of total transaction of foreign exchange, how much they are, what is their experience. I'm sure this seminar is important. Of course, it's a technical. Sometimes I have observed that whenever we organize webinars on a very, very technical subjects, the participation is less because half the time people say that, oh, I think it is very technical, we'll not be able to understand that. And normal, their account people may not be coming. And that's why the participation is not that high. But sure, these kind of webinars on a very technical subject, very important subjects will be there. We are recording the proceedings also, so that on a wider scale through our website, we will propagate it to the members who are not able to participate because of maybe their other engagements. Thank you so much. Over to Mr. Rajaman.
Well, thank you, sir, for in fact sharing your wisdom about how the Forex management, this knowledge session on Forex management is definitely going to help the members in creating opportunities of saving for expanding their export business. Now I would like to in fact invite the Vice Chairman of EPCES, Mr. Shrikant Badiga, to say a few words about this particular webinar. Over to you, sir.
Yeah, thank you so much, Mr. Arvind. And very good afternoon to all of you. Bhuvnesh Seth sir, DG sir, Puri Alok Mukherjee sir, and Vilas Gupta sir, and all other colleagues from EPCS. And I should congratulate Sunil Puri sir and for North Zone SEZ for conducting this much needed as a webinar for this industry. As you all know that how dynamic the business is turning out to be, especially the international business when you're talking about foreign exchange. And of course, end of the day, it is how much you're saving, being it the dollar or pound, how much you're saving, that is very important. Apart from doing your businesses wisely, what is important is also how do we do a business through mathematics, or knowing the policy, knowing the global policies, connecting yourself to the global currencies. All these things are also very important. I'm sure this particular webinar will run through the entire different policy in different countries and how to manage the foreign exchange nitty-gritties in your businesses. Taking that a lot of, I'm sure a lot of takeaway would be there from this particular webinar. And as far as EPC is concerned, yes, as DG sir and Mr. Seth sir was trying to tell, yes, we need some kind of guidance through this particular policy issues, especially with foreign exchange, because now the entire global is turning out digital. Even if we talk about India also, India is digital India, is no more conservative India. It is India is a digital India. The other day, we have for the festival, they come here with an ox. Ox, it's an auspicious thing. They come to our houses and give us blessings. So that guy had that Paytm barcode on the ox's face, so we can just scan that barcode and pay. So such is the advancement what we can see in the digital world, especially in digital India. So in such cases, these kind of things, we can't say ignorance. Ignorance does not work. There's no shortcut. We can't say no, I was not aware. So it is a must that we should upgrade our knowledges on all fields, especially while doing business with global houses, globally when you're going. So you need to, and it is equally important to learn about foreign currencies as good as you learn about foreign languages. I'll not take much time. I'm sure this would give me more knowledge. This session would give me more knowledge and help all our units also to learn more about foreign exchange. So thank you so much, Puri Sahab and all, for giving me this opportunity to start the session. Thank you, Mr. Rajmani. Thank you, Mr. Ritesh.
Thank you, sir, for in fact sharing your valuable inputs and also your thoughts about how this webinar is going to help the members in terms of managing the foreign exchange. And I hope this webinar will be able to address most of the queries with which the members would have come with to attend this event. Going forward, I would like to invite now the session speaker, Mr. Ritesh Victor, who is the co-founder and the country head of Myforexeye, to take over the session and address the member. The topic of the discussion is the fourth.
Arvind, I will take over. Thank you.
Fine.
I will take over. Okay. Thank you, gentlemen. Thank you, each and every one of you who has invested this amount of time. I'll try my best to ensure that this time is an investment and it is not just a webinar where you don't take away anything. I want to ensure that you certainly learn what we have learned over so many years, and you learn and you gain wisdom, become wiser, become prudent, and use it in your practices, in your businesses, so that your businesses also flourish. And as Mr. One gentleman very correctly said, it's a thing that you should certainly look at, because it is a concept which is slightly technical, obviously, because it is a financial market, but it is something which will give you a lot of savings if you manage it efficiently. And the primary concern, what we have noticed in a country like India, is that the level of awareness for forex markets is very low. And because of this low level of awareness, they are losing a lot of money, which they would have otherwise been able to save with just a bit of extra knowledge. So the one of the basic purpose of doing these kind of webinars, and we have been doing this with FIO, with EPCES, multiple government organizations, associations throughout the country. Uh, and the primary objective is to educate and train organizations who are exporting and importing, because currency becomes a very inherent nature whenever you are exporting or importing. And if you understand how to manage it well, you are adding a good 1.5 to 3% to your bottom line, so you become more profitable. Okay, so let me get into it. So I will just start with a presentation, and all of you, if you have questions, you can either type it out on the chat box, or if you want to ask a question, you can interrupt me, and I will try and answer the question. And at the same time, uh, if you want to ask something, you can even ask at the end of the session, where we have a dedicated 20-25 minutes time for an interaction. For any problems or any queries that you might have, I will try to answer to the best of my ability. Okay, so I will get to the presentation. Okay, I hope everyone can see my screen now. Is my screen visible?
Yes, very much.
Okay, great. And is my audio audible?
Yeah, everything is perfect.
Okay, great. So let's start. Let's get going. Let's invest about 1.5 hours of time and understand how FX Forex works, and how I can use it for the benefit of my organization. Okay, so first and foremost, very warm welcome. Uh, we are going to look at 4 very important aspects. Okay, and past 21 years I have worked in this market. Probably I have met some 6,000, 7,000 companies all over the country. And what I have tried to come up in this presentation is 4 areas which I feel is the predominant concern areas, or the problem areas, that I have seen among all exporters and importers in India. Okay, and when you're talking about forex, it is exports and imports both. So I will touch upon 4 very critical areas where you should look at to improve your forex efficiency. Okay, now this are the 4 points, or the 4 agenda. Okay, the biggest issue or the biggest concern that I have seen among Indian companies is managing the rates. Okay, and when I say managing the rates, it is in addition to the volatility. There is one management of the volatility, what you call as forex risk management. The other is the rates management, which is pure mathematics and pure understanding of how the mathematics work. Okay, and what we have seen in a country like India, where the level of transparency is very poor on exchange rates, the banks tend to make a lot of money, and because the corporates are on the other side of the transaction, the corporates tend to lose a lot of money because of lack of awareness. Okay, so we'll look about the rates part. Then we'll also look about one particular aspect, point number 2. Multiple exporters tell me that I do not need to manage forex, or I do not need to hedge my risk, because the dollar is always going upward. Okay, so it is a conclusion that by not doing anything, I am managing my risk. So I'll throw a decent amount of light onto how this is a misguided conclusion, and how you can do it more efficiently. The third very critical aspect I wanted to discuss about is about interest cost optimization on your export. See, all of you are exporters, probably some of you are importers as well. But for an exporter, management of working capital is very, very critical. You need working capital to run your company, to run your machines, to make your laborers work. Okay, so how do I optimize the working capital cost for my exports? I will dwell upon in point number 3. Point number 4 is probably a more management or a board level interaction, where how do you look at valuation of treasury, or how do you look at how the forex team or the treasury team is performing. Okay, so 4 very critical aspects. I would also want to touch upon obviously everyone asks me, where is rupee headed, where is the currency going, is it going to 78, is it going to 72? Okay, so I'll try and answer that question, where the currency is headed. And I'll also want to throw some light on the mobile application that we are building. Okay, we have been building it since 2017. Now it is ready, and phase 2 is over. It is ready and it is there on the Play Store. It is there on the App Store. You can download it for free for a while. Okay, it is free for some time. It will give you a lot of solutions regarding the forex market. Okay, a lot of solutions regarding the forex market. It is trying to address the major problems that Indian exporters face. And then obviously we'll have the question answer session. So one by one, any one of you, if you want to have a question, you can probably ask in between, or if you want to put it towards the end, you can ask towards the end as well. Okay, so the first and foremost aspect, how do I manage forex rates? How do I ensure that I am saving money on conversions, on forex conversions? Okay, now let's start. You know, this first sentence that you see on the top is, I always feel banks are overcharging whenever I'm converting forex. Okay, this is a statement that I probably hear from about 90 to 95% of all exporters and importers. There is a fear, or there is an element of uncertainty that I am not getting the right prices. Now, actually, that is very true. Why is this uncertainty? Because the rates are very transparent. Not transparent, sorry. The rates are very opaque. The rates are not transparent. I'll give you a simple example. If you want to buy a stock, if you want to buy an equity, you can very well log in and buy, and you know that this is the price for the stock and this is the price that I am going to pay. If Reliance is trading probably at 2165, I know that 2165 rupees is what I am going to pay to buy one Reliance stock. Everything is very transparent, everything is very clear. Unfortunately, that is not the case with Forex in India. If you have an export conversion to be made and you want a credit today for that export conversion, you don't know what the spot is. You will look at the exchange rate on some public domain. The public domain will give you a rate which is like a minimum of 5 to 10 minutes delayed. Okay, you will see, let's take 74.85, and for an exporter you will probably get somewhere around 74.70. Okay, so whatever I see, I do not get, and what I don't even know that what I see on a public domain, is it the real-time price or not? Actually, it is never. Okay, so the other big challenge in India is there is a huge lack of transparency of rates, foreign exchange rates. The real-time prices are very limitedly available. It is available in terminals. Okay, and when I say terminals, what does terminal means? Terminal means a Thomson Reuters terminal or a Bloomberg terminal, and these terminals are extremely expensive. Banks have it, very large companies have it. Small and medium scale enterprises cannot afford such terminals. Okay, so the third really big problem in a country like India is that the real-time prices are available, but they're available to a very select few people who can afford such an expensive product. A normal exporter or an importer on the ground who is doing 20, 30, 50, 100 crores of exports does not have an access to real-time prices. Okay, now another very big problem is I see one rate, let's take 74.50, but I get 74.30. I don't know what has happened to that 20 paisa, or how is that mathematics or how is that computation working for the conversion of forex rates. I will explain in the next few slides how it works. Okay, but the basic concern or the worry for all exporters and importers are these 3, 4, 5 factors: huge lack of transparency of rates, real-time prices or live rates are not freely available, whatever the margin or the compensation that the bank is charging you, there's something called a bank margin. Whenever you're converting forex, the bank will take a commission. Okay, in a crude form it is called commission, in a normal form it is called bank margin. 95% of the exporters and importers are unaware what this margin is. Okay, understand one thing, this margin is a cost to you. You need to be very, very clear about the cost. Okay, so few things in this slide and a few things I'll explain in the next slide as well. Now, when you want to look at mathematics of forex, understand a few things very clearly. Okay, now I see a rate. Whenever you look at a public domain or you look at a real-time terminal, you will see a rate, and that rate is called spot rate. Okay, everyone understands what is a spot rate. But if this spot is, let's take 75.00, do I get 75.00 for a conversion today? Actually, no. 75.00 is the spot price. And what does spot price mean? Spot price means that rate is to be settled 2 working days later. Okay, which means, for an example, let's take I'm standing on 20th October. I'm standing on 20th October. The rate quoted, let's take, is 74.85 on the terminal or wherever the public platform that I'm looking at. That rate that is quoted is called the spot rate, and that rate is for a settlement 2 working days later. Okay, which means if I am standing on 20th October, if that 74.85 rate is used, then that debit or credit, which is called the settlement of the transaction, will happen on 22nd. Now the question is, what if I want to debit or get a credit in my account today itself, which means I want to settle today itself? Now, a transaction which is settled today is called a cash transaction. Okay, it is called a cash transaction. Now, how do I get a rate for the cash transaction? That is called the cash rate. Cash rate is a simple adjustment of something called a cash spot to the spot rate. Okay, so if spot is T plus 2 and I am wanting today's rate, which is cash rate, then it will be the spot rate minus a small component of 2-3 paisa called cash spot. Okay, so which means if I have to settle today, I want to get a credit in my account today itself for a dollar conversion, then it will be spot rate minus cash spot. Okay, let me tell you, ladies and gentlemen, 99% of companies in India does not understand the concept of spot and cash spot. And this is the place where there is the biggest amount of leakage in terms of rates. Now, in addition to cash, there is spot and there is something which is in between, which is what we call as TOM, that you trade today and settle tomorrow, because there is spot is T plus 2 working days. TOM is T plus 1 working day. If I trade today and want to get a debit or a credit tomorrow, the next working day. So here also there is an adjustment called TOM spot. So a very small concept, but a concept which has a decent amount of bearing on your conversions. Okay, this has a straight impact of 2, 3, 4, 5 paisa on the conversion. And I'm sure you understand 5 paisa is not small. Now, any settlement that I do beyond spot rate is what we call as a forward. I'm sure a lot of you exporters must be doing forward contracts. You want to fix a rate for a future delivery. Okay, so anything that goes beyond the spot date is called a forward. In the next slide, again, I will explain how the calculation works. Okay, just look at this slide. So in a spot transaction, obviously you will have the spot rate. You will have, in fact, spot rate and bank margin as a common component for all conversions. Okay, because spot rate is the basis from which the calculation starts, and bank margin is the compensation that you pay to the bank. So it's the bank's commission. So bank will charge a commission on all transactions. Okay, so spot rate and the bank margin is uniform. These two variables are uniform across all transaction types. So let's understand one by one. If you do a cash transaction, as I said just a minute before, it is a transaction which you do usually. Okay, you want to convert your dollars for a settlement today. Settlement meaning debit or credit in your bank account today itself. Okay, so that will be a cash transaction. So there spot rate is used, a component of cash spot is used, which is subtracted, and then bank margin is subtracted for an exporter. Okay, cash spot will always be subtracted, bank margin will be subtracted for an exporter and added for an importer. Okay, so understand that part very well. Bank margin will be subtracted for an exporter and added for an importer. Again, if you go to TOM transaction, you will have spot rate minus TOM spot minus bank margin for an exporter. If you do a spot transaction, now spot transaction means you are fixing the rate today, you are trading today, and the settlement happens 2 working days later. The credit will come to you after 2 working days. So in that case, straight away spot rate is used and the bank margin is subtracted for an exporter. For any forward transaction, that means you want to fix a rate for a future delivery, you have a concept called forward premium. So you will get forward rate, spot rate plus forward premium minus your bank margin for an exporter. Okay, so this small matrix gives you an indication that there is a decent bit of computation, mathematics involved in each and every Forex transaction type. And this mathematics or this computation methodology, all of you need to thoroughly understand, because that has a direct implication on your Forex conversions. Okay, please be very clear about these calculations. And Arvind, probably what we'll do is after the session is over, you might coordinate with the committee members at the organization. They might want to have a copy of this presentation. Okay, so if the members want a copy of this presentation, probably you can share that with them.
Yeah, definitely, I'll do that.
Okay.
Post the session.
So, as I was saying, so what is the challenge in Indian markets? Okay, the challenge in Indian markets, as I said, was there is a huge lack of transparency in the Forex rates. Your counterparties are banks. All of your receivables or payables comes through your banks. So if you are selling currency, the bank is buying currency. So they are a direct counterparty. And just like any other commercial organization, banks also want to maximize their profit. Okay, so if bank is maximizing their profit, then you are at the receiving end. You are losing it. Okay, that is the bottom line. As I said, bank margins, you have to be very clear. In a majority of cases, the bank margins are kept variable and unclear. And it is kept variable and unclear primarily because that favors the bank. But since it favors the bank, you exporters are at the losing end. So you have to ensure that all the bank margins, all the bank charges are defined, transparent, documented, and fixed. It is a cost, which means it has to be fixed. A cost cannot be unclear, a cost cannot be variable, and you have to ensure that. Okay. Now, if you remember, I said cash spot is deducted, is subtracted from the spot. So if it is subtracted from the spot, the net rate becomes lower, and that is an advantage to importers. For exporters, it is a cost. For importers, it is a benefit. Now, 99% of the time, the importers do not get this benefit. And 100% of the time, the exporters are charged cash spot. Okay, so that is another place where the counterparty banks, authorized dealers, they make money. Wherever there is a benefit to be given to importers, they do not give the benefit. And whenever there is a charge to be taken, they take the charge. Okay, understand, banks have these terminals. Most of the banks, not most of the banks, all the banks, the treasuries and the dealing room of the banks, they have both Thomson Reuters and Bloomberg terminals. So they have all the data, they have all the information with them. We, as the counterparty, we do not have that information because it comes in different expensive terminals. So we do not have that live data, they have the live data. And because of this information mismatch, they end up making money and we end up losing money. So it depends upon our level of awareness, our smartness to ensure that we do not lose this money. Okay. Good. Now let me come to another very small part. It is a small part, but it's a very critical part again. All of you exporters and importers, predominantly exporters, if you are doing a forward, which means you are fixing a rate for a future settlement, you are fixing a rate for a future delivery. You will honor that contract at a future date. Okay, so whenever you are doing a forward, you have one choice, that the due date of that forward can be a fixed date or it can be a period. Okay, let me come again. The due date of that forward can either be a fixed one particular date or it can be a period, a range of days. Okay, so if it is a fixed date, we call it a fixed date maturity. If it is a period, then we call it a window period, window forward. And as per the current RBI regulations, the window forward can be a maximum of 30 days. You cannot have a window of more than 30 days. But you have the flexibility of using this window anytime you want. You can put as 1 to 30th of a month. You can put at 17th of one month to 16th of next month. That is the maximum. You can put this maximum as 30 days wherever you want to fix it. Okay. Understand, 30 days is the maximum. The minimum is 2 days because 1 day will become a fixed day maturity. So 2 to 30 days you can put your window. Now the question is, should I do a fixed date maturity or should I do a window forward? Okay, anyone wants to make an attempt? What should I do? I'm asking a question to everyone. So will anyone want to make an attempt? Should I do a window forward or should I do a fixed date forward?
Hi, my name is Anand.
Yeah.
Yeah, I think we should do a window forward because that gives you a leeway for a certain period of time, and based on your inward remittance flows. I mean, I'm an exporter, right? So inward remittance flows, you have a choice to close between a certain number of periods. So I'm thinking window forward would be beneficial.
Okay.
Option.
Very good argument, Anand. Fantastic. So in terms of flexibility, in terms of utilization of the forward, you are saying a window forward is a better option, right?
Yes.
Okay. Anyone else has an opinion? Anyone wants to differ or anyone wants to add some wisdom?
So as per me, I think it would be more of my cash flows, how my cash flows are going to become coming in future. If we have a certain date, let's say an LC date where I know when my cash flow is coming, it's better to take a particular date because I will be getting more forward premium.
Yes.
But in case I don't know the exact dates when I'm getting, let's say when my client gives me a window of 10, 20, 30 days, then it's preferable to have a 30-day window.
Okay, great. Both very valid arguments, very nicely put. Now, let me tell you what happens if I do a window forward and what happens if I do a fixed day forward. And as Mr. Rajan said, it should also depend upon the cash flow. If it is a certain cash flow, then you do it a fixed date. If it is an uncertain cash flow, then you do a window. Okay, that is what the general consensus is. But before we look at operational convenience, okay, before we look at operational convenience or the actual argument about the certainty of cash flows, let's look at simple mathematics first. Does mathematics give you a better idea or not? Let us look at that. Okay, so I will just try to get this here. Okay, now what happens, gentlemen, is whenever you do a window forward, let's take you do a 30-day window. Let's take, for example, I'm sitting on 11th of November and I want to do a export forward for, let's take April. Okay, I'm expecting to receive my inward in April. So I will do a window forward from 1st till 30th of April. Okay, right? That is what we are going to do, because I know my money will come in April, but I don't know when it will come. Whether it's going to come on 10th, 15th, 30th, I don't know. So I will take a window of 1st to 30th. I can use it whenever I want on that window period. Now the worry is, if I do a 1st to 30th of April window forward, I receive the forward premium till the 1st day of the period, which means I receive the forward premium till the 1st of April. I do not receive any forward premium for the balance 30 days. And in current market scenario, 30 days forward premium is close to 25 paisa per dollar. So if you look at on an annualized percentages, it is around 4 to 4.5%. So if you do window forward, then you're losing close to 4 to 4.5% per annum for that window. Okay. So if you do a window, you will lose the premium for that window period. Because if you do a window forward, you will receive premium only till the 1st day of the period. Okay, now fantastic. I've told you the problem. Now let me also give you the solution. Okay, now you should always do a fixed date forward. Now a very good argument Mr. Anand put up, that I don't know when my receivable is going to come. So how can I do a fixed day forward? Sir, you take a maturity at the farthest level. Okay, if you're expecting it is going to come in April, take on the 30th of April. Now, what is the first advantage? The first biggest advantage is if you do a fixed date forward, in this case 30th April, you get premium till the 30th of April. Okay, so in the rate itself, you are getting 25 paisa higher on the first day of booking itself. Okay, fantastic. I got 25 paisa higher in the forward rate. Now, Mr. Victor, the biggest problem is I have done 30th April. It can come on 20th April also. What will I do? It can come on 10th of April. It can come on 8th of April. What if it comes earlier than 30th April, which is like a very high probability scenario? Okay. What you simply do is, if you get your inward any day earlier than 30th April, you simply pre-utilize the forward, or what we call as the early utilization of forward. For example, what does this early utilization of forward mean? This means that I have booked on 30th April and my money came on 22nd of April. Okay, my forward is maturing on 30th, but I need to convert on 22nd. So what I'll do is I'll simply early utilize that forward which is maturing on 30th on the 22nd itself. Okay, will I get that rate? No, you will not get that rate, the rate which is maturing on 30th. you will get a simple reduction of 8 days forward premium. Because you are utilizing that forward 8 days before. So these 8 days forward premium which you have taken extra, you have to give it back to the bank. But by doing this, I have gained 22 days premium, and 22 days premium is a good 16, 17, 18 paisa. So does that clear your doubt, Mr. Anand, Mr. Rajan?
Yeah, that was helpful.
Great. So next time I have given you a very, advantageous tip. Whenever we meet, all of you have to give me a small treat, because I have made you a good amount of saving just by a small tweaking in your hedging instrument. Okay. Now, the question is early utilization easy or possible? Actually, sir, it is very easy and it is very regularly done. Whoever has been in the forex market for a long time, whoever understands the market, they do only fixed date forward. And you do a fixed date forward, whenever your money comes in, you early utilize the forward and pay back the balance premium for the days that you have got it earlier than the maturity. Nowadays, remember, a 1 month premium is as high as 25, 26 paisa. And just because I want flexibility, I can't lose 25, 26 paisa for every dollar. Okay, so I want all of you to introspect on this, understand the mechanism. We are here to help you. If you have any questions, you can reach out to me. But understand, this is something which is going to heavily add to your overall efficiency, and it will improve your overall rates, forward rates for all your hedging. Okay, great. Now let's move to the next question. Someone has put up on a chat box. Okay. Mr. Puri, do I take the questions now or should I go to the end?
I think Mr. Lokesh's question is related to the topic which you are discussing right now. Whatever the topic has been over, that can be answered at the end.
Okay, great. So
Mr. Lokesh's question is related to the topic which you are discussing right now.
yes, correct. So we will take it up towards the end. Okay, I'll be right here. Don't worry. I'll answer the question. Okay, now one very important argument that I gave at the beginning was exporters are not hedging their risk. They are not taking the forward, primarily because the dollar INR has always been on an uptrend. 5 years back it was 65, now it is 75. So if I don't hedge, I always get higher rates because the dollar is always on an uptrend. So it is like a default reward that I am getting for not doing anything. Okay. So is it a fact or is it just a myth? Or are we looking at the overall picture? Now, let me tell you a few very critical insights. Probably you would have been aware, but you wouldn't know the real economics and mathematics of it. So let me explain. The first question to this argument, does rupee always weaken? Does rupee always weaken? Is it continuously going higher like this, or it is like going up, down, up, down, up, down? Okay, all of you would have seen it is never continuously higher. It is always up, down, up, down, up, down. It goes up by an amount, comes down by an amount, again goes up by an amount. Okay, so rupee generally weakens but doesn't weaken always. Okay, second question, whenever I am hedging for a forward, I get a forward premium. So how much is the premium? The one particular part of the premium I'm getting right now for a future delivery. Okay, so continuous weakening is fine, but I also get the premium. So what I need to actually evaluate is this weakening more than the premium I received, or is this weakening less than the premium I received? That is the question to be asked. That is what we want to have a look at. Are we looking at the overall picture, or are we missing the true picture? I'll prove with actual facts for the last 21 years of actual dollar INR data. Okay. So what I'm going to show in the next 2-3 slides is not my opinion. Okay. Ladies and gentlemen, it is not my opinion. What I'm going to show in the next 2-3 slides are all facts, historical facts. It can be evaluated, it can be audited by any independent guy. Okay, and whoever does that evaluation on an independent basis will come with the same conclusion. The conclusion will not be different. So understand, this is not my opinion, this is actual hardcore market facts. Okay, now let me tell you what we did and what is the fact that we took. See, from 1st of Jan 2000 till end of October, what we did was every day, every working day, we did a forward. We did a forward for 3 months, we did a forward for 6 months, and then we did a forward for 12 months. Okay. So every day I'm doing a 3-month forward, 6 months forward, and 12-month forward. Okay, every day. Now what I'm doing is at the end of 3 months, I'm just comparing that forward that I had done with the market at that date. Okay, so when I do a forward, I get a forward rate for 3 months, 6 months, 12 months. And after 3 months, if I don't do a forward, I'll get the market rate. So I will just do an analysis of that forward rate with the rate on that due date. I will compare whether the forward rate is higher or the market at maturity is higher. Because I am an exporter, if I do a forward, I get a forward rate. I want that rate to be better or higher than the rate on that day. And I did this for each working day since 1st of Jan 2000 till end of October. Okay, so it is a 21 and a half year data. Every time I'm doing a forward, and that forward I am comparing with the spot at maturity, and I am evaluating, is the forward better or is the spot at maturity better. So when I do a forward, I receive a forward premium. Okay, I receive a dollar INR forward premium. And if I don't do a forward, the currency depreciates. There is a rupee depreciation. So it is a simple comparison between the forward premium and the depreciation of the currency. Okay. Now the results are very startling. Okay. It is very plain and simple data analysis, and the results are very startling. Now this is the result. What does this show? This shows that average forward premiums for 3 months, 6 months, and 12 months has been between 4 to 4.5%. Okay, so average forward premiums has been around 4 to 4.5%, which means 4 to 4.5% is what I am receiving as an exporter. I am receiving 4 to 4.5%. Okay, so this is what I receive. So it is a benefit to me. 4 to 4.5% forward premium is a benefit to me. Now, what is the risk for an exporter? The currency weakening, the currency going higher, or rupee weakening. And what we have seen is in the last 20 years, the rupee has weakened by around 2.7% on an average. So forward premium has been between 4 to 4.5%. Rupee weakening has been around 2.7%. What does this mean? This means that there is a easy gain, a very easy gain of 1.3 to 1.75% per annum. So if you blindly do forwards, if you do blind forwards for 3 months, 6 months, or 12-month maturity, and you compare that forward rate with the market at maturity, there is a 1.3% to 1.75% simple profit to be made. Okay, 65% of the time the forward is better than the market at maturity. So my success ratio is 65% of the time. 35% of the time the market at maturity is better than forward rate. 65% of the time the forward rate is better than the market at maturity. Okay. Anyone has any questions? This is very interesting. All of you should, think about this, introspect about this in detail. This is a very big conclusion for all your risk management decisions. Okay. And what I have seen is exporters regularly tell me, sir, I do not need to hedge because the currency is going higher. I have proved with data that if you hedge, despite the currency going higher, you are still gaining 1.3 to 1.75% per annum. I don't say it is a riskless gain, but I say that there is a 65% chance of making the gain. And that 1.3, 1.75% gain is adjusted of the losses. So it is average of the gains and losses both. It is not that it is average of only the gains. Any questions, please?
Sir, I have a question.
Yes, sir.
Actually, I'm talking on behalf of Replica Press. So regarding forward premiums, my question is, we do import a lot of machines from Europe. Now, I mean, the machines that I have already purchased or we are about to purchase are in foreign currencies. I mean, I need to pay in euros. So one way is I do a simple ECB transaction, and other ways I take a INR loan from my bank at around 6%. Plus, I do a forward premium to match with my ECB. I mean, ECB equivalent outflow, cash outflow. So, do you think it's better to take a ECB in a long run, let's say for a 6-year ECB loan, or is it better to take an INR loan and do a forward premium along with it? So, which one is more preferable to do?
Okay. Now, Mr. Rajan, if you do a ECB for long term, okay, there you have to take a hedge. There you have to take a forward. If you're taking an INR loan, there is no currency risk involved, right? So if you take an Ireland loan of 6-7%, that is the cost to it, 6-7% of total interest cost, and you take the loan in, let's say 100 crore rupees or 50 crore rupees. It's an INR loan, so it will only have an interest cost. It will not have a currency. The currency will come in if you take an ECB. Let's say you take a 10 million ECB or a 15 million, 20 million ECB, then the currency part will come in. Isn't it, Mr. Rajan?
Right, sir. So the question was, let's say if I mean the transaction comes out to be same if I'm taking an ECB which is into foreign currency, or I take an INR loan and then I'm taking a forward premium along with it.
Okay, so you're saying I take an INR loan which is at 6 or 7%. I take
6%.
an ECB which will come at LIBOR plus spread plus hedge cost, which will more or less come to 6-7%, right?
Right, sir.
Okay, so if you do a interest to interest risk-free calculation, there will be very small difference. Okay, very small difference. Your INR costing will be slightly higher, and your fully hedged ECB cost will probably save you 0.3, 0.4, 0.5%. Because
So, but as an exporter, I don't need to. I mean, it's a natural hedge for me, right? I mean, my all income, my all inflows are in foreign currencies.
yes.
So I don't need to do a hedging. I mean, a proper. Yeah.
Yes. So in that case, what you can do is, Mr. Rajan will also, out of this webinar also, we will have a detailed conversation how to manage this. But I'll give you a broad indication of how you can do it smartly and efficiently. See, if you are a regular exporter, okay, let's take you are a dollar exporter or a euro exporter, then getting an unhedged ECB loan is very easy. Okay, so if you are an exporter, you can very easily take a unhedged ECB loan. Your interest cost is going to be very low. Your currency risk on the liability side will be managed by the currency risk on the asset side, which is your exporter. Got it, Mr. Rajan?
Right, sir. Understood.
Okay, great. So, okay, this is slightly away from the context that we were discussing. So I wanted to ask any particular observations to what I have just said about doing a forward contract on regular basis and getting the forward premiums, which is usually higher than the actual rupee weakening. So any observations, any comment on that? So all of you are doing forwards or very selectively? Okay, I'm not getting any response. So I just ask, all of you are doing forwards, or it is never done, it is very selectively done?
We are doing almost 50% of our turnover.
Okay, so 50% of your receivables you are doing with forwards.
Yes.
Okay, so how did you conclude 50% and not more? Why you're keeping the balance 50% unhedged?
Uh, we are of view that if rupee further weakening, then we can take advantage of that.
Okay, good, Mr. Lokesh. So I just showed you in the previous two slides that rupee weakening is usually less than the forward premium.
Yes,
right?
I seen this, and we will take a view on this.
Yes,
Definitely.
exactly. But it is good that you are doing 50% forwards. But
Yes.
actual historical data says that you should at least increase it to 65 to 70%.
Yes.
Okay, great. So let's move on to the next.
So there's one more question which I need to ask.
Yeah, sure.
So couple of banks allow us to take a forward, and on the date of PCFC, when I need to convert, I can use this forward to convert into INR.
Yes.
But couple of public banks nationalized bank doesn't allow this. So as per RBI policy, I mean, is it allowed to take it or not?
You are saying utilizing a forward for PCFC conversion, right?
So I tell you the logic why I'm asking this. So specifically, I'm asking regarding SBI, which is my banker. So they tell me that I cannot use. So if I have taken a forward, so they are saying I'm doing a 6 months forward. I'm enjoying those forward premium, and then I am utilizing it for, let's say, the date I'm converting my PCFC into INR.
Yes.
So that PCFC is again I'm using foreign currency limits for another 6 months.
Yes.
So they tell me that we cannot do this as per RBI audit or some XYZ reasons, because we are basically enjoying that foreign currency limit twice. But
Okay.
a bank like a Standard Chartered allows me to do that.
Okay. Now let me tell you, sir, you can certainly do it. Okay. Now, one bank allowing, another bank not allowing cannot happen. Okay. If one bank allows, obviously they will not go beyond the guidelines of the RBI, right? So if Standard Chartered is allowing, Standard Chartered is operating in India and it is under the purview of the Indian banking laws. So obviously they are under the purview of RBI. Okay. So whatever RBI permits, Standard Chartered will do it. Okay. State Bank might have their own another different set of compulsions. But if you ask me, can I do it? You can certainly do it. You can use a forward contract for a conversion of your packing credit in foreign currency. The answer is yes.
Thank you, sir.
Okay. So let me move to one very important part. Just now, Mr. Rajan said that he is using PCFC. So I want to ask him why PCFC and not why PCINR.
So we do not get interest subvention in our industry. So my rate of interest is around 7%. So when I do a forward premium, it comes out to be 4%. When I take a PCFC, it's around 1.5% and 2%.
Okay. So you are not eligible for interest subvention?
No, sir.
Okay. Are you sure? Have you done an audit check that your product is
Yes,
not
sir.
eligible?
Couple of times.
Okay. Sir, you are in SEZ, right?
So we are an EOU.
Achha, you are an EOU, and
So,
it is a manufacturing EOU or service oriented EOU?
It's a manufacturing, sir.
Sir, I think you should double check whether you are eligible or not.
Sir, I have checked 7 times with all the banks. I mean, I have checked it with at least 10 banks. So they all have confirmed me that we don't come under subvention scheme.
What is your product?
Yeah, yes. Subvention is applicable till 30th of September this year.
Okay.
Now it is gone.
Yes, good.
And it was applicable for EOU also.
Yes.
So, but still, I mean, anyways, yeah.
Okay.
I mean, earlier also it was not coming under subvention scheme.
Okay, Mr. Rajan, again, I will take this offline. Mr. Rajan, you should certainly share your coordinates with me or with Mr. Rajamani. I will want to get in touch with you. I would want to ensure, or at least be 100% sure that whether you are eligible or not. But what
Sure.
Mr. Lokesh is just saying is true that the subvention was there till 30th of September. But understand, Mr. Lokesh, very well that subvention is going to come back. Okay, in what form it comes back, whether it will be a 5% for MSME and 3% for non-MSME, what it was earlier, whether it will come in that form, that I do not know, because that the government has not declared yet. But it is very clear, and we have come to know that there is a tussle between Finance Ministry and Commerce Ministry. Finance Ministry says, Commerce Ministry says we should do it. Finance Ministry says we do not have the money. But ultimately, what the government has decided that subvention should come. It might change its form, but it will come in some way or the other. Okay, there was a cabinet discussion, I think yesterday on this, and probably the notification will come in a week or so. Okay, but what I want to highlight here is one particular very important aspect of using the subvention, okay, and comparing whether I should take packing credit in foreign currency or I should take packing credit in INR. I hope just like Mr. Rajan and Mr. Lokesh, everyone is clear under what circumstances should I take packing credit in foreign currency and under what situation should I take packing credit in INR. Is everyone clear, or should I explain this? Mr. Puri, do you think that I should explain this, because a couple of members have already indicated that they are doing it?
Yes, if it takes a small time to convince, explain things to them, I think you can do it.
Okay, sure. I will explain. See, to decide or to, to decide whether I take packing credit in foreign currency or should I take packing credit in INR, I need to be very clear about the components, what we call as the interest components. It is relatively very simple. If I take PCFC, then the cost is LIBOR. Now again, LIBOR is not there. It is a short-term funding rate, but it is like a pseudo LIBOR. So you have a dollar interest cost, and then you have a spread. Spread is anything between 1.5 to 2.5% now. Okay, and the short-term funding rate is around 0.2, 0.3%, 0.4% for 6 months. So overall, PCFC will come anything between 2 to 2.5%. Sorry, PCFC will come for around 2 to 3%. Now, understand how I can reduce the interest cost if I have subvention in place, which was there till 30th September and which is expected to come back again. If I am an MSME, I get 5% subvention. If I am a non-MSME and I am under the eligibility of the codes, then I get 3% subvention. Okay, so mathematics is very, very simple. If I am an MSME, my INR, PC INR cost is around 8-9%. 8-9 minus 5, subvention I get 5. So 8-9 minus 5 is around 4%. And what you can do is, for these EPC or export packing credit that you take in INR today, you are going to repay back using a dollar inflow in the future, because you're taking a packing credit today, you're utilizing it to run your machines and you run your company, and you're going to make the product, finish the product, ship the product, and then you're going to receive your dollars or foreign currency. So for the future receipt of the foreign currency, you can take a simple forward and you get a forward premium of 4 to 4.5%. So when you receive this forward premium of 4 to 4.5%, your net interest cost comes to 0. And even if you are a non-MSME and you're eligible for 3% subvention, even then, if you work out the mathematics, your interest cost comes to 0. Okay, but the real critical aspect here is that whenever you're taking a packing credit in INR, you need to do a forward hedge, because that forward hedge will give you a 4-4.5% forward premium, and it will reduce your interest cost further. Okay, so what I'll tell you how the operational thing works. See, if you're taking PCFC, then it is very simple. You are taking, let's take $1 million of PCFC, you have converted into INR, and you take 7.5 crores, use it to your working capital operations. Okay, you get your $1 million in your export receivables, you repay back that PCFC, you pay the dollar interest rate for 6 months, 9 months, whatever is the period. Okay, that is how PCFC works, very simple. But if you take PCINR, let's take, you take 10 crore PCINR for 90 days. Your trade cycle is 90 days. So you took a PCINR for 10 crores. You took it today, but after 90 days, you're going to get a dollar inflow. Okay, so that 10 crores I convert to a dollar amount today itself. This is actually, there is no conversion. I just need to know how much dollars I need to repay back this 10 crore INR. Okay, so from the current spot and 10 crore INR, let's take the spot is 75, I get $1.33 million. For this $1.33 million, I will take a forward for 3 months, which is aligning with my export packing credit maturity. And when I do this forward, I get 4 to 4.5% of forward premium. Okay, so first I have benefited from 3 or 5% subvention, and now I get 4.5% forward premium. So my net cost becomes 0 interest rates. And when I receive my dollars after 90 days, I will just use this forward to convert to INR and repay my PCINR. Okay, so it's a very simple thumb rule. The basic simple thumb rule is that if interest subvention is available, take PCINR and take a forward hedge. Okay, so if interest subvention is not available, take PCFC. So this is the basic thumb rule for all packing credit working capital requirements. Okay, any questions for this, please? Any questions, please? So anyone wants any questions, or should I go ahead? Okay, okay. Now, since no one is asking, should I go ahead, or should I still wait for someone to ask a question?
Sir, please move forward.
Okay, sure. I will do that. Okay. Now let me come to a very questionable or debatable topic, which I have felt in a lot of years. You know, whenever I interact with exporters and importers throughout the country, everyone says that my Forex is always profitable. No one has ever told me that their Forex operations are loss making. Let me be very honest. No one has told me the Forex operations has been loss making. Now, which means that if your evaluation of any system in the company is always profitable, never negative or never loss making, that means that you need to introspect and look at it. How could something be always profitable without doing too much of an effort? Okay, so that comes to a question: how do you evaluate performance of the treasury, or how do you evaluate performance of your Forex management system? I'll tell you what actually happens. Now, the practice that I have seen, current practice 1, current practice 2, is that all exporter, whenever they get an export order, they put the budget rate or the invoice rate at least 1 or 2 rupees lower than the date when they are getting the order. Okay, for example, if the current rate is 74.50, they will put a budget rate of 73.50 or 73. Okay, so their benchmark itself is about 1 to 2 rupees lower. than the current spot. Now, the second practice is always compare the budget rate with the hedge rate at maturity. Okay, so the first practice is take 1 or 2 rupees lower than the current spot, and then when you realize your money, you will always realize more than 72, 73 or 73, 73.50. Is there any other practice of evaluating treasury? Let me just put it to the audience. Is there any other way of evaluating whether how my treasury has done? Okay, now I'll tell you what the flaw is. Since no one is answering, I'll probably people are waiting for the questions. I'll tell you what the flaw is. The flaw is that if I don't do anything, the currency is naturally weakening. Okay, which is I've given in problem number 2. The currency is naturally weakening. The currency is weakening by 2.7%. I gave you the forward versus open analysis a few slides ahead. The currency is naturally weakening by 2.7%. Okay, so if you keep your benchmark lower than the current rate and the currency depreciate 2.7% from a higher spot, so you were always getting profit, right? How will you ever get a loss? But is that the right way to analyze? That is what you have to question yourself. The second way is that even if I take the invoice rate or budget rate as today's spot and I simply take a hedge, I get 4% premium. So again, your forward rate is always better than the budget that you have taken. One way the treasury performance is always profitable because you're always getting a forward rate which is 4% higher than your costing rate. In the other way, you are not taking a hedge, okay, but you have fixed your benchmark lower, the currency naturally depreciates, so you're always getting higher than your benchmark. So whichever way you are doing it, whichever methodology you are following it, your inaction or your action in terms of a hedge is always giving you profit. Now, what we need to introspect is that the right way to do it? What we try to tell is, if you are hedging, is your treasury giving you more than the normal forward premium? That is what you need to evaluate. 4% तो ऐसे ही मिलता है, 4% market मुफ्त में मेरे को दे रही है. The market is rewarding you with 4% forward premium for free. So is my treasury getting me more than forward premium, more than 4% or more than the forward premium? That is treasury performance. In the same way, if I am not hedging and I am enjoying the 2.7% of currency weakening, has the treasury has done something? But the treasury has not done something because they have not hedged at all. But they are still showing profit because the currency is naturally weak. Okay, what we need to see, that is the treasury working efficiently? Are you getting more than the natural rupee depreciation, natural rupee weakening? That will give to the treasury performance. So understand very well, your benchmarking, your invoicing methodology determines whether your treasury has performed well or not. And as I said, the practices that Indian companies, Indian exporters follow, it always looks that they are always profitable. You need to introspect whether what is the right path. The right path is, if I am hedging, has the treasury given me more than the natural forward premium of 4%? And if I am not hedging, am I really profitable because the currency is naturally depreciating by 2.7%? I leave that question to all of you. Introspect, understand, obviously you understand your business, but understand and recognize that there is a forward premium and then there is a rupee weakening. So what market gives you as a reward, you should not take that reward as the performance of the treasury. The treasury has not done anything, the market has rewarded you. We need to evaluate and understand what is the methodology, that is perfectly suited for me to evaluate treasury performance. Okay. Any questions? Any questions before I come to 2-3 big parts of it? Any questions from the beginning till the end?
No problem.
So from the beginning, I have a question. So let's say my bank, I mean, on the charges, what we were discussing on the cash rates. So you were telling me that the cash rate should be 3 or 4 paisa less than the spot rate if we are taking it today. So let's say if one of my bank, which I don't want to name right now, he tells me, ki, "Bhaiya, main to 12 paise, I will take 12 paisa. I won't be taking 4 paisa, I take 12 paisa. If you want to do the deal, do it today. Otherwise, we can do it tomorrow. Tomorrow also, we get the same answer from them. It's the same answer what we get repeatedly from them. You want to do the transaction, you do it. Otherwise, we can postpone it. I don't have the time to do it right now. So what could be the reply for this?
Okay. Mr. Rajan, what is this 12 paisa? Have we identified what is the bank margin? Banker says that I will take X from you. But does the banker tell you कि मैं ये X क्यों ले रहा हूँ?
सब वो बताता ही तो नहीं है. I mean वो कहता है कि यही रेट है. अगर लेना है तो ले लो. मेरे पास समय नहीं है. Otherwise we will do it tomorrow. And tomorrow never comes. It's the same reply tomorrow also.
Sir, are you?
And I'm talking about one of the largest banks in India.
Okay, I know, sir. I know. This has been the channel throughout for the last 30-40 years. The simple question to the answer to this question is, am I working for the bank or is the bank working for me?
So it's easy to say that he's working for me, but they are such a large entity that I don't have the power to change them immediately. But if I go from their portfolio, they can still survive.
No, see, the banks will always find its way of surviving. Okay. The only thing that we can do is we can tell the banker that if you are taking X paisa, please define this X paisa to me. At least you can do that, right? Don't keep it ambiguous. Make it clear. Mr. Rajan, if it is a home loan, will the lender keep the home loan variable and ambiguous?
So they are not, I agree on it, but उसमें से वो नहीं बताता. I mean, we have tried so many times now that we have already given up कि भैया तुम नहीं बताओगे. I mean, a private bank in that case is are very good guys कि भैया ये मेरा margin है 1 पैसा. This will be my cash support. आपने कब लेना आप मेरे को बताओ. I mean, we will be taking this margin. But a nationalized bank, मतलब we just can't. I mean, we have just given up with them. मतलब they don't even tell कि भैया मतलब margin वो मेरे को बता देगा जी मेरा 2 पैसा margin है. भैया मैंने कैश सपोर्ट लेना था मेरे को मतलब then we tell कि भैया तेरा किस दिन में मतलब किस समय. I mean, when was your deal? Give me the details at least. They don't even give the details.
Okay, so those days are over. Mr. Rajan, please give me your mail ID and mobile number. I will reach out to you. Okay.
Sure.
I'll give you a solution which will be a permanent solution for you.
Thank you, sir.
I request Ritesh, you also post your contact details with the email IDs on the chat box so that those who want to get connected with you after the event, they can have the details.
Sure. I will do it. I will put it on the chat box itself.
Thank you.
Sir, here I would like to say that we are dealing with private bank and they have given us online platform and the margin is fixed. The moment we do transaction, it shows that the current rate is this, spot rate is this, and this is your margin, last margin. This, if you want, you have most probably 60 seconds window to accept the transaction.
Yes.
In that case, we are okay.
Okay. So let me tell you, Mr. Lokesh, right? Okay.
Yes, sir.
Okay. Mr. Lokesh, that is a good step. Okay. That will at least ensure that the rates are not, majorly different from what the market rate is. Okay. But understand one thing, Mr. Lokesh, that is a bank system. It is a system by the bank. It is not a neutral system.
Yes.
Okay? Since it is a system devised by the bank will have their own commercial interests. Okay. And since it is a device divided, created by the bank, they will even have the leeway of tweaking the real-time prices.
Okay.
Okay. So to be really transparent and being really smart about it, it is best to use a neutral platform. And CCIL, Clearing Corporation of India, duly authorized by the RBI, has created a neutral platform.
Okay.
Okay, so doing online system with the bank is a good step. Okay, but it is not the excellent step. The excellent step is getting from a neutral counterparty. Bank is a counterparty who has their own business interests. And
But
since
sir,
it is,
sir, rate showing on CNBC is the spot rate or what? Because normally when we do any transaction, we see what is the rate showing on CNBC, and we normally compare that this is the rate giving the bank or showing on their platform is normally fluctuating not more than 2 paisa or 3 paisa.
okay. So, sir, remember CNBC gives you prices, but CNBC gives you a ticker. Okay. And that ticker keeps moving. And by the time the next ticker comes in, this is a good 2 to 3 minutes. Right? Isn't it? You are looking at the television, CNBC TV, right?
Yes, sir.
Okay. Now, CNBC will give you somewhere close to the spot rate. Okay. But still, it is a ticker, as I said, and it will go, then it will show the stock prices, it will show the index prices, and then the currency will come again. By the time currency comes again, 2-3 minutes have passed. Okay.
Yeah.
So CNBC will give you the spot rate, some indication of a rate close to the spot rate, but it will not give you real-time prices.
Okay,
What I'm
sir.
saying about CCIL is a neutral platform created by the RBI, and it gives you real-time prices. So you can even save that 3, 4, 5 paisa slippage which is there. You can even save that slippage here.
Okay. So for that platform, we have to subscribe or what is this?
You have to do a simple registration.
Okay, sir.
You have to do a
Okay.
simple registration. It is done, everything is online. You can do a
Okay.
registration. You can submit to your bank's branch. They will link your account to the CCIL platform, and it is good to go from there.
Fine, sir. Fine.
So,
Okay, sir. Thank you.
Yeah.
so we have taken this CCIL platform and it's for dollar. I mean, is there any platform for euro and pound also?
Okay, now very good question, Rajan. CCIL started, I think, a couple of years back. Okay, it was what we were trying to do from 2014. RBI finally, realized that something is wrong in the market, so they came up with CCIL. Unfortunately, it has not become popular, but it is getting popular. And remember one thing, Rajan, for a country like India, our total trade, in the total Forex trade that we do, 93 to 94% is dollars, US dollars. Okay. So only 7-8% is other currencies. So what CCIL has now done is they have started with dollar. Okay. Because they want to capture the maximum audience. Euro and pound will come sometime. But to be very honest, Rajan, I do not have an answer when they will come. Okay. But
Understood.
yeah, sorry.
Understood. Thank you so much.
Okay, it will come. It will
And
come
so,
sometime.
I think there's just one more question which would be helpful to all of us. So you have told us that CNBC takes around 2 to 3 minutes. We use XE, which takes around 1 minute. So, I mean, is there any unpaid site for the exporters which can, I mean, best relate to the spot rate? I mean, which will be the nearest rate?
Yes, I will tell you. Now, Rajan, XE doesn't give you onshore rates. Okay, XE will give you NDF, offshore rates. Okay, even if you are from 10 a.m. to 3:30 p.m. India time, the XE will never give you onshore rates. XE 1 minute delay is the delay for the refresh, and the rate is NDF. The rate is offshore. What I need is the onshore price for my transaction for today. And what, in the next few slides, I will show how Myforexeye application can be your help. You can get real-time prices on the application.
So it's a paid or an unpaid one?
As of now, it is not paid. Okay, but going ahead in a few months, it has to become paid because it is real-time data, and real-time data cannot be free for infinite period. Okay, but take my word, Mr. Rajan, even if it becomes paid, it will be very cheap. It's not going to be an expensive mobile application. It's going to be a very cheap application.
Thank you, sir.
Okay. Now let me come to a couple of questions which everyone asks me. Okay. This question, everyone wants to know an answer to this question, isn't it? Isn't it? Everyone wants to know an answer to this question, isn't it? Where is rupee going?
Sure.
All of you, ladies and gentlemen, I do not know. Okay. And it is not that I don't know, no one knows. Even the RBI governor doesn't know. Even the honorable prime minister doesn't know. No one knows. It is a market. It is a massive, massive market. The size is unimaginable. The extent and depth is unimaginable. So to give a forecast is futile. Okay. But we can give you some intelligence in terms of what is driving the currency and some intelligence into what could drive the currency in the future. Okay, that is something that we can tell you with some facts, with some figures we can tell you. And this is what we are trying to indicate with some facts and figures. Mr. Puri, are we running short of time?
I think so, because we were having 21, 3 have already left. And if you can make it short, because my observation is this subject is so technical that one-to-one with the units will be much more beneficial to them than to have a general knowledge of the subject here and then have a one-to-one interaction with you.
Okay, great. So what I'll do is I will leave my email ID and my number here. Okay. And then, okay, I've just put my email ID. So whoever wants to reach out to me can please.
I will also discuss it with Mr. Anil Naurial also to have a possibility to a physical meeting or in a conference room of the NSEZ office with the NSEZ units.
Sure,
With you.
sure. So I've given my email ID and mobile number. Okay, I will take Mr. Rajan's number as well. Okay, so anyone who wants to reach out to me can reach out to me as and when you want. Okay, but let me give you a small, I'll quickly wrap up 2-3 things. For currency like India, crude prices is very important, and all of you have seen crude prices from 60-65 has gone to 80-85. So that is a huge negative for the currency. You would have also read about a lot of what is happening in US. They were printing a lot of money. Now they have decided that this has to stop. So their money printing or economic stimulus is going to reduce from November onwards, and by middle of next year this money printing will finish. Money printing finishing means lot of money that was getting printed and thrown throughout the globe, that is going to reduce. So inflows, dollar inflows into India is going to reduce. Okay, FI inflows into India has been good on the other aspects, but all the IPOs majorly are over. So more IPOs coming in, more inflows is a big question mark. Okay, what we have seen, US inflation has continuously going higher. So if US inflation is going higher, interest rates will go higher in US. That will strengthen the dollar. So overall, what I feel fundamentally is that the rupee should weaken. How much it will weaken, where it will go, difficult to say. I am also trying to give you some fundamental technical indicators. This is the long-term chart of dollar INR, and what it looks like is very unlikely that dollar will go below 72, 73. Very unlikely. I'm not saying it will never go. It is a market, anything can happen, but very low probability that rupee will gain below 72, 73. The higher probability is that rupee will weaken. And till where it will weaken, it is already 74.50, probably 75, 76 is possible. 75, 75.50 is very possible in the next 3 to 4 months. Okay, so our indication is rupee trajectory is on the higher side and movement towards 75, 75.50 is likely and possible. Movement below 72, 73 is very unlikely. That is the conclusion. Okay. Now, let me quickly tell you about the mobile application. See, as Rajan has asked, and as all of you know, you need real-time prices. Okay. Now, our mobile application will give you real-time prices. You can download it from the Play Store. It is called Myforexeye. Myforexeye. You can download from Play Store or App Store. You can log in through your OTP. It will give you real-time prices as of now. Okay, we have not made it paid, but ultimately a few months down the line it will become paid. But as of now, you use it for free. Okay, you will get real-time prices. You will get the high-low rates. You will even get the forward rates. XE does not give you forward rate, or any site does not give you forward rate. Here, for various currencies, for euro, for dollar, for pound, for yen, whatever currencies you can think of, you will get forward rates for the next 1 year. You have to just tap on this home page, whichever currency you want to tap, you can just tap on it, and the forward rate calendar for the next 1 year opens. Okay, you can use that forward rate to negotiate forward rates with your bank. If you tap, let's say I want to do a forward for, let's take 30th of July, you can tap on that date of 30th July. It will show you the spot price, the forward premium, and the net rate. You can even include the bank margin here. It will give you rates adjusted of bank margin. Okay, another thing what we can very well do is, it gives you a rate alert function. What does a rate alert do? Let's take the current market is 74.50, and you want to take a decision if market goes to 75. You can put an alert in the system that if the rate goes to 75, please alert me. So if you do that rate alert here, the mobile application will send you an alert, will give you a notification. It will give you an app notification. It will give you an email notification. So you are making the system work for you. So the system is smart enough to work in itself according to your commands. Okay, there is a huge amount of forex trading that is happening in India. So if you want to trade forex, make speculative gains, just like you trade equities, you can take trade currencies as well. So there are 2, 3, 4 trading calls that are given every day. If you need forex for your travel purposes, you can even buy forex. We are RBI authorized forex money changer. You can buy forex from us. Okay, so I quickly wrapped up. That is from my side. Any questions, anything that you might have, please ask. All yours, sir. Any questions, beginning till end? Any questions that anyone has, please ask.
Have you answered the questions in the chat box?
Let me just have a look. Chat. Okay. Now chat box. Let me have a look. Okay. The first question is, how can one check whether the bank is giving the right price or not? Okay. While changing the currency and charging. Mr. Sunil, you can use our application. Our application will give you real-time prices. So this will ensure that the rate that the bank is giving to you is right or wrong. Okay. So all the rates part is taken care of by the application. Now another question is by Mr. Lokesh. We are making forward with 15 days window. If the maturity is between 1st December to 15th December, but we convert on 1st December, do we lose any? See, sir, if you take a window period from 1st December to 15th December, you get premium till 1st December. But if you convert it on the 1st December itself, you don't lose anything. You will lose only if you convert any day after 1st December. For example, you do a forward from 1st December to 15th December, and you get your conversion on the 13th of December. If you do the conversion on that day, then you do lose 13 days premium. Okay. What window period and fixed day period, what I wanted to explain is that if you do the window, then the forward rate or the forward premium for that window you lose. And window period was done. Let me tell you another thing. Window period was done at least 15, 17 years back. And why it was done is primarily because the forward premiums were very low. For the entire year, the forward premiums were 50-60 paisa, which means for 30 days, the premium is hardly 5-6 paisa. But now that forward premium, 1 year forward premium is 3.5 rupees, which means for 30-day period, that premium is 25 paisa. So earlier you were losing 4-5 paisa, now you're losing 25 paisa. So that is why at that point of time, doing a window forward made sense when the forward premiums are low. But when the forward premiums are high, doing a window forward doesn't make sense because you lose a lot of forward premium. Okay, so 2 questions, and let me look at any more. Okay, then Rajan gave his number and all. So these are the 2 questions. So anything that you want to clarify, please ask now. I'm here. Mr. Puri, I have answered the questions on the chat box. So anything more than that?
I think enough. If anybody doesn't have questions, we can close the things. If you feel like.
Okay.
Does anybody have any questions to ask?
Please ask questions, because if you don't ask, which means you have either understood everything or you have understood nothing. So
I think they have understood something definitely, but they would like to raise the questions when they will have one-to-one with you.
Sure, sir. Most welcome. Always there to help. So if the requirement is there for a one-to-one meeting, I'll be always happy to help.
Yeah.
Or if you want me to come physically to a conference room or to a webinar seminar hall, I am always eager to do that as well.
I think we will work out something like that for NHCZ, and I will leave. Some RDs are also here from other regions. I will request them also to speak with their units, where whosoever want, they can speak with you on video conference or by sending email to you.
Sure, sir.
Yes.
Happy to help.
Yeah. So
thank you, Ritesh, for in fact enlightening all the people about the forex management and how through various tools of forex management people can in fact save vital precious money for their business operation. Now I'd like to basically in fact invite the regional chairman, Mr. Sunil Puri, to say a few words about this particular webinar as a closure remark. Over to you, sir.
You are addressing to me?
Yes, sir. I'm addressing.
There was some voice break.
Yeah.
Yeah.
So,
okay.
Yeah.
Good evening to everyone once again. On behalf of Export Promotion Council NHCZ, I thank Shri Bhuvnesh Sethji, Chairman EPCES, for sparing his valuable time from his busy schedule to attend and address the members on importance of subject matter of today's webinar. I am thankful to you, sir, for your all-time valuable support given to strengthen the council.
Thank you, Mr. Victor. I think from our company, Rajan Soni, he has shared with you good amount of his views and has taken your views also. He works for us. He's our take care of our financial management. Thank you.
Okay, sure, sir. I will certainly get in touch with him.
Thank you.
Most welcome.
I also thank Shri Shrikant Badiga ji, Vice Chairman, and our Director General of EPCES, Shri Alok Chaturvedi ji, for his initiative, guidance and great support given to regional offices to organize all such important programs which may help in growth of members companies by facilitating in saving of costs and ease of doing business. Since each forex transaction has some cost to the company, it is necessary to have expertise in handling the forex transaction while dealing with banks with proper knowledge. The company can save considerable transactions cost by smartly handling the forex management. I hope Myforexeye can help the units in a much better way. I would like to thank Shri Ritesh Victor, co-founder and country head at Myforexeye, to provide insight tips to our members on 4 most important areas to focus on forex management. We appreciate the way you have made the presentation to explain the key focus areas of forex management in easy words to our members. We hope members will take advantage of it and may seek your help as and when required in managing their forex transactions. I am also thank you, Mr. Victor, for submitting this PPT to us for distributing to our members so that they can take the advantage out of it. I would also like to thank Shri Arvind Rajamani, moderator from Myforex, for your initiative and the way you have organized and conducted today's program. My vote of thanks will not be complete until I thank all my exporters friends from all the regions for making it convenient to attend the program. I am confident that with rich and vast experience of Shri Ritesh Victor and Myforexeye, they will get the benefit out of it. Thank you so much.
Thank you, sir, for your valuable inputs and your comments about this particular webinar. I hope members would have definitely gained some knowledge and would definitely benefit from this webinar. We hope to have many more such webinars for the benefits of the member in the coming future. With this, I would like to close this particular webinar. And I would like to extend my vote of thanks once again to the chairman, Mr. Bhuvnesh Seth, to the vice chairman, Mr. Padiga, and to the director general, Mr. Alok Chaturvedi, to regional chairman, Mr. Sunil Puri, and to the regional director, Mr. Anil Norial, for making this event a success. And we hope to have many more such events in the coming days. So thank you, sir, once again.
Definitely would like to have that.
Yeah.
Thank you for the time, for the privilege.
Thank
Thank you.
you.
Hope you guys had a good
Bye.
time and learned something. Thank you. Bye.
Bye, everyone. Bye.
Thank you. Bye.